IVM.
People with good credit score, Cred has some rewards for you. A credit card payment platform, the Cred app basically rewards you for paying your bills on time. If you have a credit score of 750 or above and have a credit card, download the Cred app to make your credit card payment experience rewarding. You will get reminders, statement analysis to know about hidden charges, and even get credit coins every time you pay your bill. You can use these coins to avail jackpots and cashbacks on the app, and even get discounts on their hand-picked curation of electronics, food and beverages, luxury travel, and many more offers. Folks, welcome to Paisa Vaisa, presented by Cred, the most rewarding credit card bill payments app, and powered by Quarter. I'm your host Anupam Gupta, B50 on Twitter, and my guest today is Sumit Chanda, CEO, Monetary, the folks behind a very interesting product, Jarvis Invest, for all you Marvel Comic Universe fans out there. So Jarvis, which is, as per their website, India's first AI-based equity advisory model with an embedded risk management system. And we're going to talk about all of that and how the machines are going to take over the human beings in investing right after this very short credit convenience break. Intel vPro provides the complete manageability tools to detect, repair, and protect your devices remotely so your workforce can keep doing what they do best wherever they're working from. Today, as most employees and IT teams no longer work under the same roof, fixing glitchy PCs and proactively managing the PC fleet has become increasingly difficult. The Intel vPro platform addresses these problems. With its Intel Active Management technology, that's Intel AMT, vPro enables IT to keep mission-critical resources running by establishing a secure connection between IT and an Intel vPro platform-based PC. In the event of a cyber attack, Intel AMT lets IT remotely manage and repair systems simultaneously, even if they're dispersed across multiple locations. PCs can be recovered quickly wherever they may be. Plus, the Intel Endpoint Management Assistant, that's Intel EMA, enables cloud-based manageability using simple web-based tools to connect with and remediate any Intel vPro platform-based PC. Both these tools provide better manageability and faster response time, resulting in substantial device management support cost savings and fewer help desk tickets. Visit www.intel.in/IT heroes to know more. Intel vPro, built for business. Again, our guest, folks, disclaimer here, please do your own research before investing. This is a podcast, okay? It's not an advisory. It's not a recommendation. The website is for all of you to check out. Do your own research, probably consult a financial advisor before investing in anything, actually, right? Okay, so let's get this started. Sumit, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners.
Thank you. My pleasure.
Great. Sumit, so please introduce yourself and your product in brief to our listeners. And we'll go into detail in the second half. Tell us a little about yourself, your background, and what exactly does Monetary and Jarvis do?
Sure. Thank you so much. So hi, folks. My name is Sumit. I am the founder of Jarvis Invest. So what Jarvis is basically, it's an artificial intelligence-based investment platform wherein the entire research is being done using using technology, using artificial intelligence. So we have kind of replaced the complete human research factor with the use of technology. So that's what the entire product is. Obviously, we'll go deeper as we move ahead.
Great. So let's talk about this at the conceptual level, right? We'll get into the product later, but let's talk about first, your product is investing directly in equities. Okay, so first let's probably talk about that because this is a hot question. A lot of people ask you, should I invest in equities directly or should I go to a mutual fund? For HNI, should I go to a PMS? So why do you think investing directly in equities is a good proposition for investors instead of, mutual fund, PMS, etc., where I'm trusting somebody else, a professional person, to make investment decisions?
Right, absolutely. So, first of all, in fact, looking at all the other platforms like mutual fund, PMS, every platform is in fact good for a certain class of investors, certain set of investors. Having said that, it's actually subjective whether who should invest where, who should start with where. Now, although PMS and mutual funds, these are well-known, well-trusted platforms, but then we identify some of the limitations in these platforms, which is most of the platforms would provide a model portfolio that we look at as one of the major limitations. wherein every investor, irrespective of their size, risk profile, investment objective, and varied other things, the timing of their investments, they end up investing into the same set of same set of underlying assets. So that is where certain set of people do generate returns, but certain set of people don't generate returns, investing into the same schemes. So this is where I would say that investing directly into equities would make sense, because obviously one needs to understand his own investor profile, investment class, before investing into equities, that what is the kind of stocks he should get into, what is the kind of sector, what is the exposure he should have in the overall market, what is the objective. So all of these things should be specified right at the beginning before getting into equities. Well, if these things are in place, I would say investing directly into equities makes sense any day over any other product.
Okay, great. So now that we have that out of the way, let's talk about the main thing, which is artificial intelligence, machine language, AI,
Right.
ML. Now, I'm sure that our listeners also understand this at a conceptual level, but when I bring it to a market level,
Right.
I mean, there are what, some 5,000 listed companies in India, probably three and a half that are traded on a daily basis.
Right.
There is NSE 500, so there's a lot of stuff out there. Uh, how do you make sense of all this when your software or your product throws out throws out recommendations? Do you guys track these companies 24/7? That's a lot of work. Annual reports,
Yes.
quarterlies,
Yes.
day-to-day events. How does that process work?
Absolutely. So that's a very much valid question. So I would say that let me throw a little light on the traditional research process. So generally, if you look at the entire BSE plus NSE listed companies, so it's a good list of around 5,000 companies. Now, humanly doing research on these 5,000 companies is practically impossible. That cannot be done ever. So generally what happens is that there are certain tools like screeners or filters which are being applied, and all of these screeners and filters are primarily fundamental screeners and filters. Like, I don't want to look at companies who have not given generated returns over the last 1 or 2 years, or not given dividend in the last 1 or 2 years. So all automatically all of these companies gets filtered out, and eventually the entire universe is being brought down to say 100, 150, 200 companies. It varies company to company, and then the human research actually begins. Now what we have done here is, with the use of technology, practically, as you said rightly, we actually do a 24/7 research and across all these companies. The universe for us is not BSC, it's NSE. So we are roughly tracking around 2,000 stocks day in, day out, every day, practically 24/7. Now what we do is, basically, we do look at the fundamentals, we do look at the stocks from their sentiment point of view, we do look at how any tertiary factors can affect. It can be a news event, global event, domestic event, a lot of things, or it can be quantitative factors. So we look at from all the angles, uh, and then only we are able to curate a portfolio for our customers. So that's where the angle of technology helps us.
And there are some stocks that follow global patterns. Probably commodity
Right.
prices, stuff like that. So does your AI ML track global events also?
Absolutely. So not on stock specific, but then we do track global events also. So obviously, Indian market is now slowly and gradually becoming much global. So a lot of FIIs and FDIs are coming in India. So uh, it does affect, or it does impact what happens, say, in US or any other country. It has its impact on the Indian markets too. So we do have to track what is happening across the globe, just to track how it can impact our stocks that our customers are holding, or maybe my sector exposure, or anything for that matter. So we do track it on a daily basis.
Okay. So I found one thing very interesting in what you said about filters and screens. I think that filters and screens are a human being at work. You know.
Yes.
So when you say that out of 5,000, I'll only track 3,000, that's like you're saying you're ignoring 2,000, and who knows, from that 2,000, you might actually find the next big thing. That's
Right.
the first
Right.
thing. And also, once you put filters, you're also deliberately ignoring a certain set of companies. For example,
Right.
when you say that you'd only track, say, companies that do 12% ROEs or 14% ROEs, and you won't track anything else, again,
Right.
you're ignoring something else. And that's actually a human being making that decision out there, not a machine. So
Right.
even the framework that you give to an AI ML program is ultimately from a human. So do you think that this, is prone to some amount of biases and, that way?
I would say that it does not much affect. So it's not prone to much biases simply because we do not use any filters. We do not use any screeners. Practically speaking, for every single customer, my research starts from the entire universe of NSE, which is 2000 stocks every single day. And when we start researching on these stocks, we don't look at whether they had performed superstars in the past. We look at whether they can be superstar in the future. So it doesn't matter to us whether it did not deliver dividend return dividend in the last 1 or 2 years, or the company was not in profits in the last 1 year or 6 months or 2 years. What it matters is, can it generate returns in the next 2 months, 3 months, 6 months? If all of the entire system that we have built is able to generate 10, 12, 15 stocks out of the entire list of 2000 stocks, which I believe is not a difficult task, then curating a portfolio for our customer becomes really easy for us. So that's where that's how we are able to generate these portfolios. So coming back to the question, so as such we are not eliminating any stocks because, or rather we are not penalizing any stocks because some things it did not show in the last 1 or 2 years or something like that. So what we look at is, we keep a forward approach and we look at whether the stock can generate returns in the next some time. So that's how we approach.
Sure. Do you think this is like the quant strategy that institutional investors follow? Is that similar to this?
Quant is, yes, quant is obviously a part of the entire strategy, but I would say the entire strategy would be divided into, say, 30% fundamentals, 30% quant, maybe 10 to 15% of sentiments. Then the balance would be a mix of all other macros that we get put together, we put into the AI machine, and then all of the models have their own outputs. But eventually, the AI machine, AI at the background combines everything and gives its output.
Very interesting, and you're making this accessible to everybody, basically.
Absolutely.
Right? Okay, folks. So on, I'm sure that all of you are waiting to understand how the product actually works, and we're going to get into exactly that on the other side of this great convenience break. My guest Sumit Chanda, CEO Monetary, will be right back.
$100. That's all it takes to begin your journey with Bitcoin and Ethereum. No, really. With CoinSwitch, you can start investing in over 100 cryptocurrencies with just 100 rupees. On top of that, there are zero charges for deposits and withdrawals, so you can trade, buy, sell, however and whenever you want. All of this, plus their extremely intuitive interface, makes CoinSwitch the perfect app for beginners in the crypto space. But don't take my word for it. Just download CoinSwitch for free and try it out for yourself. If you'd like more information on cryptocurrencies, tune into a show about crypto with me, Rohan Joshi, my new adventure on IVM Podcasts. CoinSwitch, kuch to badlega.
And now, folks, we have a listener's question on company analysis.
Hello, Anupam. Where can I get earning reports, stuff like the result table, investor presentation, etc. for companies I track?
Well, I'll tell you what. Check out the Quarter app. Okay, the app has a press release from the company. The press release that the company declares each and every quarter, which contains the earnings table and the investor presentation and basically everything that the company declares with its quarterly results, which is mandatory by the exchanges. And you can check all of this data. It's in easy downloadable form on the Quarter app, right? So let's say that you're tracking a TCS or a Reliance and you want the latest earnings report. The company declared its earnings yesterday and you want to check out the table and anything else. Well, the Quarter app has all this. It has everything that the company releases and declares to the exchange each and every quarter. And the app is called Quarter, so that's a Quarter app. QUARTR, right? That's a Quarter app. And welcome back to this episode of Vaisa. My guest, Sumit Chanda, CEO Monetary. Okay, Sumit, let's start with your product. Okay, let's start, step by step. How does your product work? What do I need to onboard? What are the costs? Where can I sign up?
Okay, great. So it's actually pretty easy. So we have got our app by the name of Jarvis Invest on Play Store. It's as of now only on Android. So it can easily be downloaded from there. The user can do the registration. It will be followed by understanding the risk profile of the customer. So we do a risk profiling. Then we try and understand the customer by knowing that how much he wants to invest, what is the investment horizon that he's looking at, and then looking at these three parameters, and the fourth parameter is the recency. So if he is wanting to invest today versus if he wants to invest after a week. So based on these four parameters, as I said, the system does a live research at very moment when the client is there on my mobile app, and it would curate a portfolio according to all the investment profiles that we have created and throw it up on the mobile screen. Uh, from there, as we move ahead, obviously there's a KYC step, and then there's a selection of brokers that we have already integrated with. It has the popular names like Zero, the Upstocks, Master Trust, and Angel Broking. So if the user has any of these, accounting among any of these four brokers, he can seamlessly put their IDs and go ahead and trade. Now, that's not it actually. So this is just the initial portfolio recommendation. Obviously, my system needs to track the portfolio throughout the entire year. So for that, we have also created a predictive analytics based risk management system that would track the portfolio for the next 365 days for the customer. And the primary objective of the risk management system is timely, I would say timely booking profits, because obviously if I am recommending you say 12 stocks, so all the 12 stocks will not follow a similar journey. So some will reach its peak, some will keep gradually growing. So the system smartly understand that when the peak is being reached and it's coming down, it would exactly book, almost exactly it would book at the peak of that particular stock. So every stock, every investor would have a different journey. And it also understands if there is a change in the market or the economy, and it would trigger a rebalance for the user also. So it would, I would say, all in all, it acts as a digital fund manager for the customer. So that's how it is. So
And
it's pretty simple.
pretty simple. I have a lot of questions here. Three. Okay, let me just segregate them into three. First up, what is risk profile? As in, do you ask certain questions on the app that gauge my risk profile? Is that how? Could you give us a few examples on how you gauge the risk profile?
Yes, absolutely. So we do ask about 10 questions on the app, wherein we just try to analyze what's the risk-taking appetite of the customer. Now, these would be general questions, like very easy to answer questions like what's your investment choices, where do you invest currently, where is most of your money invested today, how would you react if the market falls and if your money starts falling, what's your income range, what's your saving percentages. So by analyzing these questions, we fairly understand that whether the customer is conservative in approach or aggressive in approach or moderate. So having said that, we have got 6 risk profiles in our on our product. So we start right from risk averse, conservative, moderate, moderately aggressive, aggressive, and very aggressive. So it's a wide range of risk profiling that we do. And we do give an option to our customers also to override. So say somebody gets say a moderate, but he says that no, I don't want to take risk, I want a conservative. So he still has the option to override the risk profile that we generate. But then rest of the other things, everything would be a part, a factor based on which the portfolio is being generated.
Very interesting. And I'm assuming that you only look at investments, which basic at investors. Sorry, so you're not doing F&O out here.
No, we are not. So we are doing only portfolio strategies, cash segment only.
Okay. The third question follow-up that I had from your original answer was that, I mean, I thought it's difficult to predict the top of a stock, right? I mean, you just look at, say, Bajaj Finance right now, it's just going on and on up. How can you figure that? Yeah? I mean, that, okay, this stock has been, the top has been reached or the bottom has been made. How does that process work?
So I would say technology has, advanced a lot. So from that perspective, for any given stock, so there are so many data points available today, which humanly is impossible to track, first of all. So if you look, from an angle where we use technology, so it is practically possible for us, say, again, considering the factor of Bajaj Finance. So it is possible for us to look at how Bajaj Finance has performed over the last, so since the day it got listed till date, what has been its each day movement, and what are the factors that has impacted this movement. So if it has gone up, why it has gone up, it has gone down, why it has gone down. how it got impacted, when the entire financial services as a sector got impacted, or maybe during a budget, or maybe during a monetary policy, or maybe during the pandemic. So the system is able to track all of these factors practically in fraction of seconds. So
Sure.
that's how we are also able to predict that if an event in future happens in this manner, how will this predict, how will this react. So that's how we are doing. So the prediction that we are doing is practically we are doing 44 days. So what, 44 trading days, which is technically 2 months in advance. So we do the prediction. So practically saying we fairly know when it's going to peak and then come down. So from that perspective.
Okay. And go on. Sorry.
Yeah, so I'm saying, and so far we are having almost 86% accuracy in the predictions.
Oh, wow. Okay. From the sound of it, it looks like you have different portfolios for different investors, right? So
Yes,
if there are 1,000 people who you have on your platform, there would be 1,000 very different 1,000
yes,
very different portfolios, right?
yes,
Okay.
absolutely,
And I have a dashboard on which I can track that on a live basis.
absolutely. So you have a complete dashboard showing you all the postmortems of sectorial and market cap wise, stock wise, allocation wise, gain loss, everything. You get a dashboard on that.
Okay, why would you not go to a small case with this, in the sense that, or is your product different from a small case, right? Because small case also has portfolios of equity
Yes,
advisors. So just to explain the difference there.
right. So I would say the biggest difference is the recency of the portfolios and the customization that we are providing. So in small case, although it's a good platform, but then at the end of the day, it's all model portfolios which are published even there. So every investor, so today if 100 investors are registering a particular small case and investing, so all 100 are going to invest into the same set of portfolio, same set of underlying asset, which is not the case with us. That's one. Second is most of the small cases there are being tracked by human advisors. So again, doing a risk management on a really live sense becomes impossible, because how will you track so many parameters? So that is where again I would say a differentiating factor in our product, which is we are using predictive analytics with risk management system. So it's not that I am just recommending and forgetting the customer, but I am practically handholding the customer for the next 365 days. So he can be rest assured that irrespective of whatever happens in the market, his savings are practically in safe hands, and somebody is
Okay.
tracking the investments day in day out.
Okay. And just to get the regulatory and the legal part of this, you are offering this service, you're offering this product as what? As a SEBI RIA, or how does that work?
Yes, we do have a corporate license. We are RIS.
So, which means that you're a SEBI registered investment advisor. So, in case people have any complaints, they can log that
Very well.
on the scores platform, etc. And you would have to follow the system to address it, right?
Absolutely.
Okay.
Very well.
Okay. What are the kind of costs involved out here?
So we charge 2.5% of the investment value for the entire year. So that's how the charging structure is at our end. But then apart from that, there are no other charges, nothing linked to performance, no exit loads, nothing. So it's just one flat charge, that's it.
So that means if I am with you for over a period of 5 years, then you charge me an annual fee, what, at the end of the year, at the start of the year, when I sign up, or how does that work?
So generally the charging happens at the initial signing up.
Okay, so I sign up, you take 200. So if I put 100, you take 2.5, invest 97.5. 1 year later, when my value of my portfolio goes from whatever, say I'm lucky and it doubles from 97.5, it goes to 200. So you will be charging me 2.5% of 200, right?
Right. So how it happens is, so if you're investing 100, so we invest the entire 100. We do not deduct it from there. We charge it separately. So your entire 100 is invested. Then after a year, say your 100 becomes 200, then we will charge on 200, but your 200 still gets invested. So we do not deduct anything from that.
Oh, so I sign a separate check for that. I have to make a separate payment for you for that.
Absolutely.
That's interesting. That's quite transparent. I mean, it's different from a mutual fund, right? In the mutual fund, the expenses go away from the NAV.
Absolutely.
Okay, fantastic. And just last two questions, Sumit. First is that you mentioned a list of brokers. What happens if I don't have any of those brokers with me? What do I do then?
Absolutely. This was for the users who wants to use our mobile app, and we have got four brokers. So number one is we are increasing the number of broker integrations on our app. So probably in the next couple of months, we will see about 10, 12 brokers on our app. So that would bridge the gap. But till that time, we also have an offline model. So in case somebody has any of the brokers which is not listed on my platform, so we still have an offline model where we can accommodate these investors, wherein all the services are exactly the same except the transaction which the customer has to manually do. That's it. Except that the tracking, everything is same.
Okay. And, I have to ask this because, God forbid, if Monetary shuts down, Jarvis shuts down, is my money safe?
Absolutely. So, I'll answer this in two parts. One is so the money is always there in customers' demat account. So we are not the custodians of the money. So from that perspective, the customer is the owner of his money, of his demat account at any point of time. He can choose to sell, exit, whatever he wants. Number two, as from a company standpoint, I would say so we are fairly a cash flow positive company, so we don't have that fear that the company might close down or something might happen or so. So fairly, we are a stable and a growing company. So I would not say that any investor should be fearful even from that angle.
So if I want to wind down the service, what do I do? I just, send a mail to you and that's it. The contract is over. That's it.
Yes, yes.
Okay, very interesting. Model tell you in Jan-Feb 2020.
Okay, that's a great question. So to actually talk about that, none of my customers were invested in the month of March.
As in the equity market.
Equity market, yes. Equity
Wow.
market. So the system my risk management system could systematically shift customers' money from equity to cash right from end of January. And it finished everything, even the last penny of my holdings by 5th of March 2020. So my customers, so we use it in a lot of our presentations. We try and show the graphs that the system was tracking at that point of time. So none of our customers practically ended up losing money. They in fact made some money and they moved to cash. Then the market crashed, and the system got rebalanced right on the bottommost point of the market, which is 23rd of March 2020.
That is some serious accuracy. Are you answering kya lagta hai questions, by the way? Because right now Nifty is what 16,600. Are you, whatever listeners throw this question at you, what would be your answer?
So honestly, it's I would say I can't answer that looking at the regulatory hurdles, but then obviously we fairly understand how it's going to move and all.
Sure. Folks, if you have any questions, please reach out to Sumit directly. The social media credentials are there on the description of this episode. But that's it, folks. That's a wrap. Like I said, please do your own R&D, your own research and all that into the product. So where can people reach out to? Your website has all the answers?
Yes.
So, folks, there it is. You can just Google. You can just write Monetary Jarvis on Google. You come to the website and you can just throw your questions out there. Sumit, I guess Sumit is probably reachable on a LinkedIn or somewhere on the social media profiles, right?
Absolutely.
There you go, folks. That is a wrap on this episode of Paisa Vaisa. My guest, Sumit Chanda, CEO Monetary. Sumit, thank you so much. Thank you so much for doing this for our listeners.
Thank you, Anupam. It was a pleasure being there.
And now it's time for the great privilege tip of the week. Folks, handle your impulse purchases. Believe me, they feel really good, but the joy of that ownership kind of tends to go down pretty soon. That's just how psychology works. You feel excited while buying it, but plan your purchase. Probably time it for a big sale online or when you're getting a good deal. Most importantly, remember that the best discount ever is not buying something you don't need. Okay, that means you're spending absolutely zero. If you don't need it, don't buy them. Just plan your purchases. Well, just think, impulse purchases feel great, but they also hit your finances and sometimes in ways that you probably can't even afford. So please plan your purchases. Think about these impulse purchases to handle your overall finances. That's the great privilege tip of the week. And thank you, listeners, for listening to this episode. If you're enjoying this show, please do share it with your friends, family, and people that you know. That would be really helpful for us. You can listen to this show and other interesting shows on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. And if you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter and B_50 on Instagram. Thank you so much for listening to Paisa Vaisa, presented by Cred, the most rewarding credit card bill payments app, and powered by Quantum.
No material on this show should be considered as financial advice. The material on this show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
IVM.
Okay, and now outro. Arey boss, here I forgot to add in the intro यार that क्या था powered by something and something, right?
हाँ
You want me to
no
do that again?
no we can patch the older one. We any which ways will patch the intro and outro, the one we recorded last time na,
Huh.
because that has the reference wala as well, like
Okay,
refer
so
the podcast to other वो वाला line, so we'll add everything from that.
okay, so we can wrap this up right now then. No?
हाँ we can
Okay,
wrap
so
this.
I'll put this as correct privilege so that we can upload it there, and I will use a separate. I'll use another laptop for our recording. When is that? Tomorrow, right?
Yeah, Prashant Sawant.
Okay, so we'll end this for here.
Yeah cool.
Chalo, ठीक है.
Thank
Thanks
you.
Sumit. Thanks Deep. See you guys. Bye.
Bye.